This is the December market report. To give you an idea of what's going on, there really hasn't been a lot that's changed in November and the first part of December from the prior months. Sales are new contracts written are strong, still moving up. They slowed a little bit in November. We think maybe that was possible because of weather. It actually was a little bit colder the first part of November this year than last. We actually had one fewer business day this November. So there are a lot of reasons for that. But written business was actually our closed business rather, was actually pretty strong. So we'll see what happens if that written business in October and November that was higher than usual, if that translates into a stronger closing month in November, December, and a little bit into January. So we'll see how that all comes together. But in general, it's the same pattern that we have been seeing. The month supply of inventory is about the same as it was last year. So inventories are rising. Sales have risen a little bit as well. So in general, we're seeing going into this year, going forward, a market with some momentum. The good news is with those higher inventories, as we said prior months, we might see buyers start to come out of the woodwork a little bit, maybe this winter, because they've got more things to choose from. So we're hoping that's going to have some value. But on the other hand, as we said last month, reminder to sellers, because there are more homes for sale in the marketplace, it might feel a little slower because we have about the same number of buyers and maybe a little bit more number of buyers in the marketplace, but we have even more listings in the market. So we have those buyers spread over a wider base. It doesn't mean the market is necessarily that much slower, but it does mean we'll probably see fewer multiple offers in that bidding war that we have been seeing. One of the other things that we've looked at in a general sense across the country has been what are the trends that we're seeing that might lead to our conclusion this is a sustainable expansion in the real estate market. We've gone through two very good years. In the first couple of years, 12 and 13, were really that bounce up, that release of pent-up demand. So now that's been released a lot, what's going to happen? What's the normal market going forward? So a couple of things that we looked at. One is you're surprised to see that the number of, across the country, these are national figures, that the number of jobs in the marketplace, number of employed people, is higher now than it was the peak of 2007. Now the job mix is different. The jobs aren't quite as high paying as they were in the peak year of 2007 in that era. But again, even with the more and more dual income families, from a real estate standpoint, we're seeing two of those maybe not quite as high paying jobs coming together for a single family income, and we're seeing that translate into sales. The other thing that's interesting is that household net worth is actually at an all-time peak. Again, higher than the previous peak, which is 2007. Now, that's a combination of everything that has value in a household, but mainly it's stocks and bonds and home equities. And home equities make up the majority of that value. Now, what that means to real estate is that higher household net worth gives more confidence to consumers, so they tend to spend more. And from a housing standpoint, they tend to take more housing and big ticket risks. So as long as that net worth keeps rising, and certainly the rising stock market helps that a lot. So as long as that keeps going to this year coming forward, that looks like that's good news for us. One of the other things that's sort of a backwards good news is that the number of people owning homes, households owning homes, has been flat for the last probably 6 years. It was rising dramatically through the 90s and the 2000s, and then when the recession hit, it went flat. And logically, that's probably pent-up demand. Those are a number of people who had to rent because they couldn't afford to own anymore. But in our surveys that we've seen and that NAR has taken for those people, we found that most all of them want to buy as soon as they can again, as soon as they can financially support that. So we think that even though the homeownership numbers have flattened, we think that they're going to pop up again this year as well. Maybe not as strong as it's been for the last 20 years, but still come up again as well. The last national trend that we're watching has been a bit of frustration for us, and that is young adult home ownership and first-time home buyers. That's dipped quite a bit. And there's a lot of reasons for that. There's student debt. There's the fact that lending standards are tougher than they had to be, and that really affects first-time home buyers a lot. There's a lot of issues there. But we think that that's also an opportunity because, again, the surveys of of young adults are that they all would love to own a home again the first chance they can afford to do so. So although it's down in the low 30s now, we think that over the next few years that'll rise back up, maybe not up to the 40% it was before, but in the high 40s, or high 30s rather. So those are opportunities as well to drive demand for the next few years. So going into 15, some optimistic numbers in terms of the market momentum, good inventories, good economic news, in general some good momentum. So we think 2015 will look a lot like 2014, maybe a little slower in terms of unit sales, but still a lot better. And we look forward to a great year. Thank you.